Okay, ladies and gentlemen, welcome to Boom, Bust, and BS with me, Christian Purefoy, and Anti Milewski. Today, gold's touching about 4,200, so we've brought in our what seems to be our resident gold expert, Victor Cantore from AMEX Exploration.
Victor, glad to have you back, buddy.
Well, thanks. Yeah, thanks for having me here. I always love being on your show.
So look, a lot of M&A going on, and a lot of things going on in the market in Canada. And I can't help but wonder. I mean, it's been what, 2 years ago we were talking about all the sustaining cash cost of 1,400. Man, if we can only have $2,500 gold, we're going to make money. Is everybody making money now in Canada? Are all these gold producers making money? What's happening at these gold prices?
Oh, it's fantastic. I mean, you just see it every quarter. All the gold producers are going to be beating their projections, and nobody is using above $2,500 gold anyways. And every day they're selling gold at 4,000, 4,200, 3,900. I mean, they're all making lots of money. All the producers right now. It's a race, and for the developers, it's basically a race to get to production as fast as possible. That's really the key.
Well, I mean, look, for at least a decade, maybe even more like 15 years, almost no money has been raised for exploration. Like, it's been really challenging for especially junior exploration companies. But I don't even think the larger companies have had budgets. Plus, over the last couple of years, you've had consolidation. And so where there were budgets, they've been cut. And I just wonder, if every single day you're digging dirt out of the ground, grinding it up, pouring some acid on it, and making gold, where do the nuances come from? I mean, what are these producers going to do in an environment of 4,200 gold when no one's really looked for gold now for a decade?
Well, you gotta do what obviously it's self-serving, but you gotta do what Amex has done. Basically we ended up acquiring 70 kilometers on strike and 500 square. We control now 500 square kilometers on one of the belts of the Abitibi Greenstone belt on one of the deformation
That was an
zones.
announcement within the last week here. I mean, I saw that you got 500 square kilometers or miles,
Yeah,
kilometers.
yeah. So 500 square kilometers and 70 kilometers on strike in one of the main deform, in one of the deformation zones. Like you're on the deformation zone.
So you got to have one of the largest land packages in that region, eh?
Absolutely. Contiguous, I'm not sure anybody else has it larger.
So what
It's
does that mean? Now you've got this big land position. Does that mean you're going to go out there and do like the early exploration kind of stuff, and then you spin that out, or what? Like what? I mean, that 500 square miles is a vast area. What do you do with something like that?
Oh, we're just gonna continue exploring. Like just if you leave it to the imagination, when you go 70 kilometers between Val d'Or and Rouyn-Noranda, or 70 kilometers of strike along any of those deformation zones in the Abitibi Greenstone Belt, like how many mines are on there? So we're just gonna continue exploring on those.
And
Uh,
for our kind of, a lot of people are starting to think about gold who haven't thought about it in a generation or maybe ever. So you've got your core deposit.
that's
So let's
correct.
say you're building a mine there. A mine is built. If you make a discovery 100 miles away, 70, 80 miles away, is that, going to be would that just hypothetically be standalone and you spin that out and it's another gold mine? Or on a land package like this, if you make multiple zones, multiple discoveries, do you kind of send it to one centralized area? Like I mean, I know we don't know, but kind of how does
Yeah.
that typically work?
No, absolutely. You'll be bringing it to your own mill. So it's not like you have milling costs, transport costs, especially when you're looking at the high grade, the way it is. And you can move that easily as long as you're bringing it back to your own mill. 70 kilometers is not it's not very expensive to transport. And if you were to ask me, do you feel confident you're going to make more discoveries? Absolutely. And once you've got a central mill, like, which would be our own mill. Yeah, you can transport it. You can transport it to your own mill. I mean, the way we're doing that business plan, where we're going to do the first few years as toll milling, that's just to get us into cash flow, and then you can get into aggressive exploration programs with the free cash flow. The key in all this is keeping your all-in sustaining costs as low as possible. That's really the key, because you'll end up coming up with big free cash flow that you can just continue exploring.
And how are you doing that, Victor? How are you keeping those low?
How are you keeping?
Your all-in sustaining costs, how are you keeping them low?
High, so your mill is going to be high grade. It's high grade gold. You're beside a town. It's a former mining town. Today we put out news. We did community outreach. They're very supportive. It's in French, but there's one of the main the TVA. They covered it, and usually you have people talking about not in my backyard. Here it was, when can we get the jobs? When can we apply for the jobs? We want to start working here. So you're beside electricity. Like where do you want to build a mine is exactly what we're contemplating. You've got hydroelectricity, you've got a workforce. Workforce is very important to have. So I don't need a mining camp. They can go home and go to, hockey with their kids at nighttime.
Yeah, no, Victor, that's an interesting point. So, okay, your setup is such that you've got sealed roads, paved roads right up to the site. You've got power, you've got all these things. Like, that's in contrast to, say, something like in the Northern Territories, for example,
Yeah.
where they're built, or in Alaska is a great example. I mean, I've been looking at some of these copper projects, which are fantastically large projects, but the road alone can be $500 million. I mean, it's insane,
That's
right?
correct.
And so your kind of point is you can keep your costs down because you're just frankly next to the infrastructure, and so you don't have to build any of that. Is that the right way to think about it?
Absolutely, absolutely. And then when we discovered this Champagne zone, like we really the whole goal was to define it. I mean, it's hard to find another zone like this where you're looking at 800. Right now, it's 831,000 ounces and measured and indicated at 16.2 grams per ton. Every hole we were putting in, it was all like this. Now I got to call this. I can't even call it high grade anymore because guys are calling 1 gram high grade. This is like ultra high grade. So that's what we did. We defined it, and now we're going to go look for ounces. We're going to go look for ounces with the free cash flow. I mean, right now we're financed all the way until the end of 2026. Bulk sample sometime in the way our business plan is, sometime in mid 2027, we're going to be generating about $100 million from that bulk sample. And after that, it's all free cash flow that we're just going to continue exploring. And by no means it's not a small production profile. We were talking about the first 10 years at 112,000 ounces per year. And you can grow that by making more discoveries. It comes down to show me the money. If you've got a profitable project that you can put into production with very little money, show me then. Just put it up.
Spectacular. And so in this big land package, unlike, Africa, sometimes because of infrastructure, you make a discovery, you almost split that off into like a separate deal. Here, the way it works is you, as you say, like it's so close and you have the infrastructure. Really what it does is it just changes your production profile. So you go from X 100,000 whatever to Y, and you add that new zone in.
Absolutely. Absolutely. That's all you do. You just keep. So the first few years we're going to toll mill, but after that, all the new discoveries that you make along that belt, you just keep bringing it to your own central mill. If you have to increase the mill, you increase the mill. And the way we've done it when in phasing it is really helps. I mean, we're really fortunate that the way it is, but we will end up phasing it. So, financial risk is extremely limited. I mean, when you can put up a mine with $77 million of capex, that's not expensive with the
No, it's
profile
not. It's
of
nothing, by the way.
112,000 ounces a year,
Yeah, it's not.
right?
Oh, how does it work? Okay, so you have zone A permitted, let's say, like, we got this little zone permitted. You
Yep.
drill, some stuff out over here that's super interesting. You want to build a mine. Does the permit here impact, the zone over here, or do you have to like reapply for a new permit, or is it faster or easier? Like how, like a high level, how does that work?
Yeah, it should be faster because usually what takes you long is the tailings management facility. So at this point, it's not we're not contemplating and putting one anyways. But if let's say it is, so usually it's your tailings management facility that takes time, and so let's assume 4 or 5 years later you do have one, and you're just the permitting will be a lot faster just because of that. But you'll
Oh,
still have to get extraction permits But it's wherever you're going to be bringing the tailings, you need to bring in the tailings, the tailings there. But the fact that you already have one, it does speed up. I mean, the metallurgical profile should not be different. Geologically speaking, when you're talking about 70 kilometers, it should have the same. If you're looking at gold now, if you throw in VMS in there, yes, that'll be a little bit different.
Interesting. So, look, gold's had this spectacular run. The geopolitics don't seem to have changed globally. U.S. dollar depreciation, crazy politics, wars. What's your outlook on the price of gold over the next 12 months?
I still think the price of gold. I still think the price of gold is going to continue increasing. I think this U.S. administration is really looking to get into going from a trade deficit to a trade surplus. In order to achieve that, I think you're going to have a weaker dollar. In order to have a weaker dollar, you're going to see gold. You're going to see gold going much higher. And if I come back to our project, like to Amex's project. You know, at $2,000 gold, we have a 2-year payback, 47% IRR, and these are all after-tax numbers, and $652 million NPV against the $77 million capex. Like those are spectacular numbers at $2,000 gold. So that's where I'm saying you need to have high-grade gold, good jurisdiction, a lot of infrastructure around, and those are the projects that are going to go forward. But I do believe that gold is going to continue going a lot higher.
Well, look, I can tell you, as you probably know, we published recently, 3 of our picks for takeout targets, being Skeena Resources, Trellis Gold, and of course AMEX Exploration. So you guys are one of our top picks for all the reasons that you talked about. And we're excited to kind of continue to watch. Now, let me ask one more thing before we let you go. There's a bulk permit that's kind of outstanding. When is that?
Yeah.
Next couple months here?
Yeah, at most we're expecting it. It could still be as early as before the holiday closes in, but January we should be the latest. It's what we call here in Quebec an ATI for a bulk sample, and it's usually 3 to 6 months. We're about 2 months into it. The fact that we're toll milling it, so the tailings are going to go somewhere else. It actually speeds things up. The fact that this is an underground project, it's at least the beginning. The Champagne Zone is an underground project. It speeds things up again because on the environmental side, you're not really disturbing much at surface. So, and again, all that is going to be production. We've applied for a production size portal mill. Not the mill, sorry, for the portal, the ramp, the decline, the above ground infrastructure, it's all production size. So once the bulk sample comes out in the mid 2027, when we're simultaneously looking for the permit for the full production, we're just going to continue producing right after the bulk sample. So yes, that's on its way. On the Ontario side, it's a little bit different than Quebec. We have to sign an exploration agreement, so look out for that. That should be soon. All the land that we bought, we need to have an exploration agreement with the First Nations there. But they're very good First Nations, very business oriented. They have a lot of exploration agreements with many companies. So I'm not foreseeing any issues at all there. It's just a question of putting together the numbers and signing the exploration agreement.
No, that's outstanding. So, Victor, it was great to have you today. And look, we look forward to chatting with you in the new year. We'll get a follow-up on these permits and any updates.
That's great. Thanks a lot. Guys.
Cheers, Victor.